Thanks, Vanessa. James Cantor, New York Times. Commissioner, one national authority will assess the entire taxable profit in the EU for each large company. There's single assessment, as you've made very clear. Then each national authority will impose its own corporate tax rate for its slice of the profits in that country. So there can still be multiple tax rates around Europe, and of course, multiple tax rates globally, of course. So that difference in rates still clearly leaves an incentive to shift profits. And that's where I'm really stuck. Can you point out what elements in this law or what elements or element of this new law precisely stops companies from shifting profits to places like Luxembourg, Panama, London, Bahamas, wherever? Or are these in the new law, or are they in laws that you've already proposed? How does that precisely work, that you stop the profit shifting? Thanks.
First, as I said, we are going to integrate the rules established by the Anti-Tax Avoidance Directive inside this package, and we are going to extend them to EU, non-EU countries. Second, with those rules, the incentives for profit shifting will be, of course, smaller. But I wouldn't be so critical against the differences of tax rates inside the EU. One might wish to harmonize those tax rates more. Some might want to have a minimal tax rate. I'm not discussing that, but I'm well aware for years that we have to face a constraint which also reduces the possibilities to act, and which is very respectable as such, which is national tax sovereignty, and the fact that we need to have unanimity to adopt that kind of directive, and I know that it won't be that simple. So some might be disappointed, but some others might be reassured. We are not going to come back or to critique some countries with this or that tax rate. This proposal is pro-business. It's not anti-competition. It doesn't want to reduce the attractiveness of any country inside EU. It wants to encourage investment. It wants to develop the effort on R&D. It wants to establish more transparency, to reduce costs, and to cut red tapes, and also to avoid profit shifting. And you must also remember that it is a two-step approach. Of course, first we will establish a common tax base, but then we move to consolidation, and consolidation will also reduce any kind of incentive to profit shifting. So I think really it's a very coherent proposal economically and also on the element of fairness that we pursue since the beginning of our action here and my action as a taxation commissioner.